Hello, everyone. How we doing tonight? We are going to be doing a special review tonight because I've had someone who keeps asking about the London framework, and he is not the first. A lot of people constantly have questions about all of these range frameworks I use, and more specifically, how they are used on Rice Statistics, right? How can I get the data behind it? How can I find some additional insight to find it? Sorry about that, guys. And so today we will be covering that. Fair enough. Hopefully, you guys are excited. I see some new faces in here as well. So it's definitely going to be a packed one. But real quick, just before we start, I want to confirm that you guys can see my screen and you can hear me all right. Awesome. All right, well, we'll start with our review at first, and later down the line, later in this event, we will be going over to Rice Statistics to cover the basics of range raids framework. I feel like there has to be a better name for them, but that is the name that they are. It is not a pretty name, but it is what it is. Now, looking at our charts, I'm not going to lie to you guys. After Tuesday, I was expecting a bearish continuation. So I was definitely caught off guard by Wednesday. I was not trading myself, which is pretty cool because then after, I can look to find my framework and I can understand where it is going next, right? Because if we did not continue off of Tuesday, what does that mean? Well, it means we want to dive higher. I don't need to understand if it is a retracement or an expansion higher. What do I mean by that? Will it simply retrace into this range, or will it continue higher past the first premium in efficiency, which in this case is this premium order block? Now, in an order block, a bearish order block minus for me, we have two levels. We have the order block itself, which we want to look for it to be respected, and we have the midpoint, which we like to call consequent encroachment. Not consequent encroachment, mean threshold. So let me just check it out. By the way, whenever I'm trying to be precise on a higher time frame, I hate trying to place it because it's so hard. So 23,552.75. So I'll just go here to the coordinates and say 23,552.75. Control A, Control C, Control A, Control V. Copy and paste that line. And as we can see, I definitely did that right. 23,552.75. Why is my line being up there when it says my midpoint is here at 23,552.75? Well, I guess I will have to zoom in and make it a line. It's awesome when TradingView bugs. I mean, it rarely happens, to be honest. Or did I say 532? I might have done it wrong. But all that to say, here is our second level of our order block that we are looking for, which is the mean threshold. If we disrespect the first level, then we look for the respect of the second. Now, of course, as I said, on Tuesday, my idea was going to be to continue lower. But as we saw, we disrespected it on Wednesday, which means that my next objective is going to be the mean threshold. And if we close through that, my next objective is going to be the external of that range, right? Because we are disrespecting the first premium. So my logic says we are going to go higher. Now, in this case, we did close below for today. So tomorrow's definitely going to be a little bit of a rougher one. But I'm going to be looking for retracement into our range pretty much. So, right, pretty straightforward TGIF. Enough about tomorrow, though. Let's talk about today. Bullish until this level is met, followed by being able to be bearish. See, myself, the trades that I took today that worked out were short. And that's what we're going to go look into. I just wanted to give you guys all the insight behind it. Let's actually do this. And let's call it mean threshold daily order block, right? This is how I annotate my charts, by the way, when I'm trading. I like to have them like this. I think I wrote 552 earlier. I'm still pissed about not being able to have drawn that correctly, but it is what it is. If we look at the daily framework, let's remove previous day high and low. As you can see, we took previous day high pretty early. But what we see are the indications of what could be a trending day. But what is the one criteria that we did not see that dictates that, hey, I can look for full reversal to go lower after this mean threshold is met, right? First of all, we have our objective. As soon as this is met, you can then look for at least a retracement lower, but my bias flips bearish. Let's actually make this a dotted line so we can see a little bit better. But the one criteria that we are missing, well, there's two actually, but we have no SMT at our key level, right, that we would be looking for. We do have some red at the open, so that criteria could be met there, but we did not trade back to that daily open during Asia open. What does that mean for me? Well, very simple. I don't consider this a trending day. So when I'm looking at the open, I have no reason for myself to go long. What I'm looking for is a fake move higher to then go lower, right? I did not anticipate that it would be so wide. We did have a little consolidation at the open with a lot of divergence. But as we can see, right at the open here at 9:30, we had 8:30 news. So we're looking to trade the session open. Right at that 9:30 mark and a little after as well, we had a lot of SMT. So I did use this one, but it is true that since then. So right at 9:30 and continuing after, we had SMT at these highs. This is just another sign that we can now turn bearish, right? Daily objective met, SMT at the highs, and what we like even more, what happened, Magic? Did you miss that today? Did you miss that SMT? Or rip Discord, the sound? Hello. You've been sharing that you've been having some sound issues, but is it happening to everyone here? Because we noticed that a new member that joined the call a little bit later didn't have these sound issues. Sorry if you're watching the recording. We are managing Discord. Always some weird stuff going on there. Hello. If you're having underwater mic, what? For everyone? You know what? Let's try that. Everybody, meet me in the public study room. Why not? I will ask you guys to mute yourselves, but join me in there. Hello. Right. Let's try this again. I will mute you guys just so you don't show up in the recording, or if you guys are muted, that is fine. All right, well, let me cancel the stage and make sure the event is hosted here, maybe. Hello. Let me just create an event right now so we can make that happen. Where are we? We are in the public study room. And just for any people that are joining in late, I want to give them a chance. Is the mic better here at all? Hello. Let's do this. And let's start the event. Yes? All right. It might just be a stage issue. If not, something I can do is I can create a voice channel where you guys do not have the right, basically, to speak on. So definitely a lot of stuff that we got to figure out. But for now, let's keep this price action review going, and we'll figure it out later down the line. I'm glad we found a temporary solution for this. What we were going to be going over is that, hey, daily objective has been met, SMT at the current high of day, and moreover, we have our London framework. Asia low remains open, and a retracement to our daily opening price, let me remove this for now, is imminent, right? So these are the types of days where you can look for a full reversal and be pretty confident in your bias. For me, there was no reason to long. We already were overextended. So even if you had a bullish bias, truth is here, you should never be looking to long, right? It's kind of like if I told you guys, I'm looking to short here, you're too late, right? There is no point in shorting in this area. We also had a nice PM lunch trade, which we will discuss as well. So a lot of opportunity today. I did not see it myself, the PM lunch trade. So we'll have to see about the results of this. For now, as I said in the morning, now you see a lot of drawings on my chart currently. That's why when I'm live, by the way, I don't know if I've said this before, but I look at 3, 4, or 5 most recent breakers, and I remove them once they are invalidated. That way my chart stays clean and I only see the most recent information. But when we're reviewing, charts can get cluttered very quickly. But in the morning, we are bearish. So we don't need to see the bullish ones. And we only need to see the ones after 9:30. Of course, these are what these time filters are for. But what we see pretty quickly is that once this SMT was established, we had some trade opportunities. Now, I myself took this first short right here. Everything aligned beautifully. We had our London framework, which, as I said, we will be hopping over to Rice Statistics later in this call, just to cover all of these bases, have a little bit of an educational session. But I took this first trade. I had my stop at the high of this inversion fair value gap because I had inversion fair value gap. This had yet to become a fair value gap, order block, and inversion fair value gap for my 3 PD array stop loss. And I was targeting London low. As you can see, this offered plenty of risk to reward, which with also more opportunity to be more profitable, I guess we could say, with Asia low, the daily opening price, and also a level I want on my chart, the current low of day, right? So with all these levels, you had a lot of opportunity. This is definitely a good trade that I would take again. Sadly, it just didn't work out. But you know what's funny with these types of things, guys? This one doesn't work out, but hey, look at the next one. Beautiful entry right after. Now, there are multiple things we can look at here. The indicator currently sees this as the unicorn, but the one I personally traded today is this line right here. Now, it is going to get cluttered, but I traded this breaker, which, as you can see, was formed right here at 10:07, and I traded it with this unicorn. Still a few kinks that need to be adjusted for the unicorns in the indicator, but live on your chart, you would have seen the right one, right? Because this had yet to be invalidated. So if we were to go in replay mode here, before this becomes an inversion fair value gap, it would have shown you this one, giving you the nice entry at 10:08. Now your stop, no matter the PD arrays, even though there's only 2 PD arrays here, right? The order block and the IFVG, you would have still put your stop at the high of this because that is the invalidation point of the breaker, and coincidentally it aligns beautifully with this bearish gap for a nice third PD array. Myself, whenever we form the low of session, right, I interact with it the same way I do current low of day, right? I understand it as a key level and that we can reverse from this key level, so I like to look for this as a partial, and as you can see, this allowed for beautiful partial. If I bring my standard deviations in as well, you can see that they align beautifully with 2 to 2.5. So this for me was my first take profit in this trade. Definitely ran a little longer than I liked. I wish I would have taken profits a little bit earlier here, but sadly I did not, and I had to hold on for an additional, I think this was like 15 minutes, almost 13 minutes here for my take profit to be hit. And of course, you guys know it. This was my first partial, and later down the line, let's remove our daily level for now. I look to take profit at London low right here. Now, I'm not going to lie to you guys. All of this potential return was left on the table for me. Yes, I could have had even just a current low of day or 13R trade, but these days, during the summer, to be more precise, I'm being a lot more conservative, and I'm very happy with my results coming from that. It is a personal choice. It is me changing my model. Why? Because I understand that during summer, we're going to see a lot more consolidation, a lot more high resistance, and I'd much rather secure some profits. Like you see, this move lower was very high resistance. It was hard to go lower. Of course, not when you look at this little leg right here, but overall, very high resistance. So for me, I prefer to take profits aggressively. And to be honest, this is not aggressive at all. I'm up 9R and 170 points. So this for me was my final exit, but you could definitely leave a runner on the trade like this. As I said, I prefer to be more conservative during these summer months. For me, that was the end right there. One loss, one win. Of course, the continuation here, I do understand that someone in the Discord actually took this trade right here. So we formed another breaker. You had this inversion fair value gap. You had another entry here with a very nice tight stop loss just at this high, actually. I'll show you guys, why not? Right, taking the entry on this inverted fair value gap, still offered plenty of return, but of course, not to the same point. This is a continuation entry. There's also this inversion fair value gap right here, which gave you an entry there. There are multiple entries there, but what's the truth about it? What do we always say? The first one is the only right one, right? Everything else is just a continuation trade, and you should have been in that first one. Those were the trades for the AM. Of course, myself, I decided to stop right there and not move further. I hear some people joining. I do want to say, sorry, it's a little different than usual. We're not in the stage channel, but Discord has been buggy and causing some sound issues in the stage channel. So we're in here. If you join in, please mute your mic and we can keep going. Now, as I said, I decided to be done for the day there, -1R. I did 6R realized on this trade with these take profits, so definitely a very nice return, but you could have kept going. Truth is, even if you were short in the AM session, you would have looked to end your trade at the current low of day at least, right? So maybe you're still holding a runner there, but for myself, at the current low of day, I'm done. But what do we have right here? Another statistical range framework. This is the perfect day to be going on Rice Statistics right after, because we had a successful London framework and a successful lunch framework. So definitely excited to go there. We're going to change the indicator to now be in bullish mode, because as soon as this low gets taken, and also with additional confluence, right, current low of day, we can then look to long. Our truth is, this would have been a very rough lunch trade, if I can say it like that, because you would have had 2 losses before a win. So as we can see, this is a valid entry right here. Your stop, where would your stop be? I did not look at the PM session at all. So you have this inversion fair value gap. Then if you're entering here, you have order block. So your stop would actually be pretty tight on this one. Still would have led to a loss. Actually, only 1 loss, because you would have been holding this trade instead of taking this second entry. But let's say you missed this one, this would have been your loss. And the following setup, so the third one in this case, would have given you a win. See right here, you have inversion fair value gap, you have fair value gap, and you have the fair value gap below. So you have a pretty decent 3PD array stop loss rule there. And of course, your final objective being, your main objective, not final, being lunch high, I would still look to take profit. How do we find these take profits? I'm going to head over to my 5-minute chart. I'm going to look at the range that I'm looking to reverse. So this entire range right here. And I'm going to find the first premium in efficiency, which in this case is this high right here, giving me a partial of a decent reward. I can see it right away, 2.65. So look to partial at the first premium in efficiency in a 5-minute chart, with your second take profit being at lunch high. And of course, you can definitely hold a runner. But at this point, myself, I always look to close my trade at 4 p.m. So in this case, I would have actually not met the lunch high, but only this the closing price of the previous candle, pretty much. As soon as this candle opens, I'm out, because it is 4 p.m. Actually, I don't know if I said this, but I made a bot that only trade lunch trades. And let me tell you guys, there is a lot of potential, especially during the summer, for these PM trades. Overall, what do we see? If you were bullish, well, in the morning, you would have gotten fucked. And then the PM, you would have had 1 loss, 1 win. If you were bearish, in the morning, you would have had a loss, a win. And at PM, well, you had a little continuation here. So overall, had some shorts offered, same setup, 1 loss, 1 win. And had some longs offered with the same setup once again, 1 loss, 1 win. So definitely a lot of potential return on a day like today. Hello. I got fucked in the AM because I took the longs, yeah. As I explained, for me, I had my daily level, I had the SMT at the highs, and the daily structure. And as I can add, the London framework, that all told me to go short. So I took my statistics and looked only for shorts in the morning session. All right, this is what I mean when I'm talking about frameworks. Yesterday's bullish BA changed my bias. That's what's dangerous, right? You got to understand, okay, it's going up, but where is it going? Well, for me, it's my order block and my mean threshold. These are my 2 levels. So once that bullish level is met, I understand that it can now go down. Is this a retracement or an expansion? I don't care. It does not change anything for me. All that I need to know is that I can now look to short. So for me, that's how I go about things. I don't know about you, Augustin, but for me, whenever I have a hard day, it's awesome to go hear other people speak about their charts. I have not done it in quite some times, um, but definitely want to get back into it now that I say it. Hello. Why even take the first long after lunch? We want to still wait and swing below the daily open. I don't care about this. Truth is, this is purely statistical. And as you can see, the daily open is here. So you already traded below the daily open. You took the current low of day. You took lunch low. Your statistical framework is now live. So for me, this is definitely a good long. If you want to be a little more picky and wait for a big move lower, sure. But for me, that's just going to miss me a lot of trades, right? I try and not bring my intuition into it and what I want to see, right? What would be the perfect setup? I don't care. Is this a valid setup? I have a framework, I have additional confluence, and I have a good entry or said framework that is confirmed by my daily structure with these two levels. So this is an A+ setup for me, 100%. Appreciate the input. I am glad. Do we have any final questions before we dive into Rice statistics? The statistical range frameworks are pretty easy. I will explain them once we get on the app, but I also want to showcase the data for them. So you guys got lucky coming in tonight. We're going to cover some pretty cool stuff. Hello. And I'm not seeing any of you guys type. So we're going to head over to Rice statistics and let's look at some data. We won't be spending too long here, probably 10 minutes, but where are we? This is the Rice Statistics app. If you're interested in learning more about it, you can go on our website. It's pinned in the official links here. But what we see here is statistical data, in this case, about ranges on NASDAQ, and more specifically, the London session. Now, what is the London session for us? It is the London trading hours of 2 to 5 a.m. This is our London kill zone, if you want to say it. Now, what we are interested in is not the range of said thing. It is not when the extremes formed. It is more specifically when and how often do we take out the high and low. Not going to lie to you guys, I'm not too interested in the when, because the truth is it happened most often either right after the session, right, or at 9:30. And we can even go with some little bigger intervals here so we can see a lot more data between 9 and 10 and right after the range. What I'm mainly interested in are these two little gauges right here, right? What are these? These are statistical probabilities of reaching the high, and the low of the previous London session. Right here, without any filtering, we already see we're at extremely high percentages. But where we want to fine tune more specifically is using, not specific extreme, we are going to use specific ranges. Of course, you can go specific rates. You can go more in depth. You can filter based on the direction, based on what day of the week you are, based on specific news events. But that's not what we're going to be focusing on. We're going to be focusing on what I call the London RAID framework. Now, what is that? Well, it is when between the 5 a.m. and 9:30. So when between the end of the London kill zone as we see it, 5 a.m., and the start of regular trading hours, so the New York opening time, we take out one side and leave the other one open. We have a statistical probability of reaching the other one during the New York session. This is what we want to see. So how do we make this happen on our chart? First of all, we have two things we see. We see our little sliders here to give us a time event. So what we're going to be focusing on is 5 to 9:30. I'm going to try and pinpoint it perfectly. See, 9:35. Whenever I share my screen, I try and keep a little bit of a smaller screen, so it's a little bit harder to be precise. So basically, if you guys are having a hard time with that, you have small screens or whatever, you can always go into your Google and change the zoom. But this is what we're focusing on, and then we're going to be focused on when we take the low after 9:30. What did I do here? Well, first of all, I said we're only considering if the high was taken between 5 a.m. and 9:30 a.m. and we're only interested if the low is taken between 9:30 and 5 a.m. the next day, we can go even more precise and say before the end of the session, right? So we'll just say before 4 p.m. on that same day. So right now we're looking at one specific thing, which is exactly what happened today. And more specifically, we'll see this second thing, which is our little checkbox. As we see here, we only show periods where raids occurred during the selected time window. What does that mean? We want to force it to be a high rate, because if we look here, what is this telling us right here? It says that 96% of the time we raid between 5 and 9:30. I'm not interested in this data. I want to say if that high got taken, so now we'll see this switch to 100%, right? If the high gets taken between 5 and 9:30, what are the probabilities of taking the low between 9:30 and 4? These are some pretty intense filtering options that aren't necessarily self-intuitive, but you can always go to the help section. Everything is detailed. Right here is what we see. So with nothing else added, we see that 57% chance of reaching said London low during these hours. And of course, you can see this this probability distributed throughout time. Now, as I said, you can add more specific options. Like, for example, today we were Thursday, and now you see this probability changes a little bit. We can even say, hey, unemployment claims, does that change anything? Does that make it better or worse? However it is. And here we'll be a little more specific and say for USD, we'll say unemployment claims. There we go. And we'll see this probability goes slightly lower. Also, was it a bullish or bearish London? It was a bullish London. All these things that we can bring inside, of course, specific extremes, all of that. But the truth is we see about between 50 and 60%, 50 and 57 probability of reaching said London low. This is a statistical data. Now, of course, if it's 50-50, can it be profitable? Well, yes, as long as it offers you more than when you lose. So as long as it always offers over 1R, then a 50% win rate is profitable. And we are fine-tuning to see specifically that. Now, once again, we can do the exact opposite as well. Let me just reset the filters here. I want to remove all these filters. And we'll go back into the raids and we'll do the opposite thing for the low, right? So we'll say, hey, between 5 and 9:30, we took the low. Now, are we going to take the high? And if so, by what percentage between 9:30 and 4? So this is when we have a London framework where we take the low between 5 and 9:30 and we force it, of course. Now, how often will we go to the high of the London session between 9:30 and 4 on that same day? We can see here it's a little higher, 60%. This is normal when you use the entire data set. What does that mean? Well, we're seeing 20 years of London sessions, right? You can see a lot of data points here. So whenever you're using a lot more of these, and this is a nice data point, over all these times, 70% of the times London is bearish. That's pretty interesting. But when you're using so big of a data set, it's normal that bullish properties on things like the indices futures, which are more often bullish, are going to be slightly higher than the bearish ones. Overall, what did we showcase here? Well, of course, how to use the right statistics and everything, but the main key aspect we want to focus on in the data is that, hey, if you take out either the high or the low between 5 and 9:30 and leave the other side open, there is a statistical probability that we will be reaching for that other extreme during New York session, or if you prefer calling it that, during regular trading hours. This is the specific data we just look for. That is without any advanced filtering of, hey, sometimes we have specific news events. So for example, what if we had CPI, right? And I want to know on CPI, and let's go a little more detail. Let's show our CPIs. I want to know on CPI. Well, hey, this number just went down by 9%. It is still a profitable framework to trade, but I understand that it happens less often on CPI, which doesn't surprise me because oftentimes CPI will just run on-side with price. What if I don't care about the news and I just want to focus on, I don't know, the last 5 years, right? So as this loads, we can go back to the rates and we say, hey, during the last 5 years, it's a little less of a statistical probability. What if I only want to look during the months of the summer, right? Which is what I'm talking about. So we say June, July, and August, right? I only want to look during these months. Now, of course, I do have to bring our filtering back, but let's look at it. Let's look at if the low gets rated. I'm actually curious to see this right now. So this is what we call fucking around with data and having fun and actually studying to look for profitable trading frameworks. I'm just curious into how it affects it just during these months. As we can see, just June, July, and August, a little bit higher of a statistical probability. Hello. We'll be studying during the weekend. I'm glad you are enjoying it. Very, very glad. Always awesome to have some positive framework. Definitely let me know what you think. And if you have any questions, you can always tag me in chat. We're always open for review as well, right? If you enjoy it, we do appreciate it very much. If you can share it, we do have a link directly to our reviews and our official links. So if you do enjoy it, we always like to hear about it and to be able to share that with other people. But this is my insight, right? This app I built to share data and statistics, but this is nothing new. But now we talked about the London sessions. What can you see about the months, the weeks, the days? Of course, standard time and New York time, which is midnight to midnight New York time, standard time, what you see as your daily candle. And all of these sessions, there is so much value and so many profitable statistical frameworks you can trade. And whenever you guys ask me, what are your frameworks, right? What do you look for when you look for a trade? I trade these statistical frameworks with a unicorn entry. And I confirmed with what I know about daily profiles. What is that? The current daily movement, the daily structure. And since it is a very profilable asset that I trade, NASDAQ and ES, right? Hopefully you guys found this interesting. So now the next time, here, let me switch back over to TradingView. The next time you see frameworks like these, you will know and have the confidence to trade them, understanding that there is a statistical probability that we reach this. Now this, for example, today, right, we didn't look at too many filtering on the bearish option, but this was 51%. Is this extremely high? No. But if I know that every time I take this trade, I will win it 50% of the time, all I have to make sure is that I am making at least over 1R. Now, of course, this is barely profitable, right? But for me, I never look to take a trade that is below 1.7R to my partial. So did I have that today? Yes. Which means that even if this was your trade today, where you entered super late on this move with a super wide stop, but you only traded these London frameworks, you will be profitable. How do I know that? I have the data of the last 20 years to showcase it. And if you prefer more recent data, you can always do the last 1 year or 3 years and look at more recent data, but you'll find extreme consistency in these statistical frameworks because they are based around how the markets work and at what times, time-based liquidity, pretty much. That is the best way we could put it, right? At what times specific people engage with the markets. So a lot of value there. Definitely only covered a part of it, right? In Rice Statistics, we currently have 2.8 billion data points. So definitely a lot there to cover. Yep, statistics never lie. Definitely. So this, by the way, this is all recorded. So if you guys are looking back and you're having a hard time, or for example, as you were saying, the Augustin, you want to be studying Rice Statistics this weekend and you're having some more questions about how we went over what we did today, this is all recorded and will be uploaded probably within the next 45 minutes on YouTube. Do we have any final questions? We did cover a lot today, a little bit of a longer PA review, but I believe people will definitely appreciate that very much. Hello, 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 hello. By the way, also, I do have a question for you guys. How you guys liking these gradients on your server roles? Hopefully you enjoy them. I'm not sure yet if they're going to be staying, so would definitely not mind having a little bit of insight on that end. right? The little gradient on the basically you guys' name when you're talking in chat and stuff. Hello. Longtime YouTube watcher, first live I've been able to attend. That is fucking awesome, dude. Hi, welcome. I'm glad it went the other way. Usually people join the live and then decide to go watch on YouTube because they can watch it at any point in time. I'm very happy to see it went the other way. The difference in being here live, Spark, is that you can ask questions. So definitely some value there. You can also ask questions in the comment on YouTube, but it's not the same. I'm glad you could make it. Y'all goated. Cool. I'm glad to have that feedback from you guys. We're going to call it a night here. I took that trade today. Fucking awesome, dude. So many people in chat telling me, hey, like I share which trades I took, and I'm like, hey, I traded the same thing. And see, today I was super happy to see that everyone took that loss and then that win. I was like, yes. See, why are so many people trading the exact same thing? Because it is actually a mechanical model. You do have to understanding first, but once you understand it, it is systematic. And that is how you become profitable in these markets, my friends. On that note, we are going to call it there. Definitely a little bit of a longer review today, but I thoroughly enjoyed it. Thank you guys for making it. Thank you guys for adjusting to the little sound problems we had on Discord. But we're going to call it there. And just to answer your question real quick, Magic, does the bot trade this model? I have multiple different strategies that are trading the markets automatically, right? Automated trading. But yes, I do have one that trades these exact moves. Yet I still like to trade on my personal account because, I mean, I have nothing better to do with my day. Fair enough, I hope. You guys have a great night. We'll see each other on Sunday, actually. But I will be available in chat tomorrow if you guys have any questions. Have a good one, guys.